Good morning, Ben with the Short Sales Group. Wanted to call and check in with you guys today. Having a lot of the same conversation with a lot of people, and just wanted to kind of talk to you about it and get your opinion and give you information. The question that people have been asking me is, how will this affect my credit? How will the short sale affect my credit? And at the same time, they're asking me, can I continue paying the mortgage through the process of the short sale to help save my credit? Now, there's very few people on the spectrum of people who are doing a short sale. There's a very small percentage who are current and trying to do a short sale, even though they're current, but it happens. I'll give you an example. I'm working with an individual right now who's being transferred. He's actually getting a promotion, but he's moving to Malaysia with his family. Wife and 3 kids are moving to Malaysia. I don't know where on the map Malaysia is, but I know that he can't afford to have a house in Malaysia and a house in Michigan. So he's doing a short sale, but he's current right now. It's a great problem to have, getting a promotion, making more money. But again, carrying 2 mortgages is just more than most people can do. What we're doing for him is we're helping him transact the short sale. He actually had a buyer. He knew somebody who wanted to buy the house but couldn't get a mortgage for the value of the mortgage. He can get a mortgage for the value of the current value of the house. So let's break down the 2 questions. How is this going to affect my credit? Well, first of all, this is not tax or legal advice. This is my understanding and really our experience here. This is what we've been seeing out there in the market. When a short sale goes through, the way that the mortgage company will report it is paid in full for less than the full value of the loan. It's kind of like when you have a credit card and you negotiate a credit card. You got $10,000 in debt, you pay them $3,000 today, it goes away. Basically, when the FICO or the credit reporting agency, when they score your credit, what they do is they take a look at the last 24 months and they check out, how's this activity, what's he been doing. You're going to have, let's call you the average American. You got 3 credit cards with revolving debt, you got 2 car loans, and you've got maybe a student loan, and you've got this mortgage. So you've got, what was that, 7 accounts? If you're current on all those accounts, all right, and they look 24 months back and they see you had 19 months of paying the mortgage, paying everything, and then you had 3 months where you didn't pay the mortgage, and then on the 4th month you had a short sale, and then it continues. Eventually, down to 24 months, that's going to just knock off. Okay, it's going to fall off your credit report. Versus a foreclosure or bankruptcy, which stays on your credit for years. But the short sale, after 24 months, will no longer be on your credit, because again, that will knock back every month as it's looking back 24 months. Even that being said, the short sale is not going to destroy your credit. What really kills people's credit is when they look back 24 months and they see 9 missed payments, a bunch of late payments, and there's that roller coaster of missing payments, catching up, missing payments, catching up, and that's really what kills people's credit. If you do a short sale and you're current on everything else, and you were current on your mortgage before, and this is the one thing that's hitting your credit, somewhere between 50 and 100 points is what your credit's going to go down. Don't hold me to that number, because as soon as you do, somebody's going to come across and they're going to get hit for 110 points. So again, this is not a fact per se. This is just our experience. This is what I've been seeing in the market. This is what I've been seeing on people's reports. And so this is just kind of a guideline to go by. But 50 to 100 points is the normal hit to somebody's credit if everything else is good. Now the second question is, can I continue to pay my mortgage while you're doing the short sale? Well, you could, but there's a number of short sale companies, there's a number of mortgage lenders that won't allow you to. IndyMac, for example, we're working on a deal right now with IndyMac where IndyMac is saying, before we'll take a look at the short sale application, this homeowner has to be at least 60 days defaulted. Okay? There's other banks that say they just have to be at some point in default. There's some banks that say 30 days default. There's some banks that say 90 days. Depends on the bank. It depends on the lender. It's up to you. I'm never going to tell you that you have to stop paying your mortgage, but it's really a comfort level for you. Most people who are doing a short sale have already stopped paying their mortgages anyway, so that's not really a factor. But this is really, these 2 questions are for the person who is not in a terrible situation, but they do need to get out of their house. So they're current with all their bills, they're current with their mortgage, but they do need to do a short sale. So if you want more information, check out www.shortsalesupport.com to submit an application, or you can go to www.theshortsalesgroup.com.
Have a great day.